Good morning, everyone, and happy Friday. Welcome to the Fortem Wealth and Hammer Metals webinar presented by Jackson Securities. I'm Aidan Lane, one of the investment managers here at Fortem, and we're joined here by Daniel Thomas from Hammer Metals. Dan, how are you this morning?
Good morning, Aidan. I'm very well, thank you. And yourself?
Well, thanks, Daniel. It's a great day here in Sydney. We're looking to get in the sun over the weekend and enjoy ourselves. But we're here at the moment, so let's sit down and learn about Hammer. So the situation for today's webinar, we'll have a short presentation from Dan. He'll give about a 10-minute introduction about Hammer and what they're doing at the moment, and some brief history of the company as well. From there, we have some planned questions, and then we'll take live questions from the floor. For the viewers, there's an opportunity to ask questions in the bottom hand right of the screen. I will endeavour to answer as many as possible. If we can't get to all of them today, we'll follow up and we'll answer them as such. So Dan, do you want to take it away with the presentation now?
Yeah, fantastic. Thanks, Aidan. Just let me know when that pops up on the screen.
So that's there now.
Fantastic. So for anyone new to the Hammer story, Hammer's a copper and gold explorer. We're exploring two of Australia's prime mineral districts. The typical disclaimer that you would expect to see for a junior exploration company is there. I'll let you read at your leisure. As I mentioned, we're a copper and gold explorer operating in two of the world's prime mineral provinces. The Mount Isa province, home of many tier 1 copper, lead and zinc deposits. We've been operating there for some time and we've managed to build quite a strategic 2,200 square kilometre tenure there. We have a copper inventory, so we're advancing our exploration efforts with a JORC inventory, JORC compliant inventory of 400,000 tonnes of copper equivalent metal. That's quite significant. It's about $3.5 to $4 billion of in-ground value, depending upon commodity prices. We've got some momentum behind the story at the moment. We've had a recent discovery in our Queensland project within our joint venture with JOGMEC there, and I'll talk a little bit more about that in a second. As important as having good projects is having good people, and we have people involved with Hammer that have got previous experience in delineating world-class resources. So Ziggy Lebenecki and Russell Davis, who are both directors of Hammer, were also the discoverers of the Gruyere deposit for Gold Road. So Gold Road, similar to Hammer 15 years ago, junior explorer looking for good deposits in good regions. They made a discovery there, and I think most of the listeners would be aware of the Gold Road success story. In terms of where we sit today, we're fully funded for our upcoming programs. We've just completed a 10,000 metre air core program in Western Australia, and I expect some assays from that program to start flowing through and out to news in the next couple of weeks. Equally, we're busy in Queensland at the moment. We are drilling. We're part of a 4,000 metre reverse circulation drilling program, targeting not only the discovery at Trafalgar, but also some targets in our 100% owned ground. I touched on Ziggy and Russell, the capital structure of the business. As we sit today, we see a market capitalisation of approximately $80 million. We have, based on our last quarterly report and our recent fundraising, we have $11.2 million in cash, so well and truly funds to see us through the next 12 to 18 months and have really aggressive exploration programs in both Queensland and Western Australia. In terms of our registry, Russell and Ziggy own the predominant amount of the 13% of the shareholding that you see there for the directors. And our other top 20 shareholders are people, high net worths who participated in the success of Gold Road and have continued to follow the story in Hammer Metals. One of the investors comes out of Germany and is a natural resource investor, Deutsche Rohstoff. We have a very tight capital structure in the top 20 shareholders who have been long-time supporters in what we're doing. I spoke about a strategic holding in Mount Isa, and if you have a look at the regional diagram here, pretty much every deposit you look at there is a significant world-class mineral discovery. They're not hammers, but they show you the ability of this province to deliver world-class discoveries. And the likes of the Mount Isas and the Glencores, the deposits, Cannington, South 32, Evolution and Glencore with the Ernest Henry IOCG deposit, to have a tenure of some 2,200 square kilometres in the centre of all of these discoveries is quite remarkable for what was a junior exploration company. But with depressed copper prices over sort of a 5 to 6 year period, the team has built a quality land package here. And I think in a rising commodity price environment, we stand to benefit from that. In terms of our resources, Kalman's the pick of our resources. It contains 360,000 tonnes of copper equivalent metal. It is a mixture of copper, gold, molybdenum and rhenium. We own that project 100% along with our resources at Overlander and Lane. Importantly, all of these projects are within 25 kilometres of a major highway that runs in between Mount Isa and Cloncurry. In terms of where the company's heading, I'd like to say that we're looking to move from being just an explorer to being a developer of resources. As I mentioned, that sort of 25-kilometre radius with a number of JORC resources in there, combined with some recent success and a discovery as part of our JOGMEC joint venture at Trafalgar, is starting to build an inventory of copper mineralisation that can elevate us from being purely an explorer to a development company. In terms of the JOGMEC joint venture, they're earning an interest over the dark blue areas here. So it's approximately 15% of our total land holdings in Mount Isa. They're earning a 60% interest in those areas by expending $6 million over 5 years. We're approximately 2 years into that process. Interestingly, JOGMEC received a number of approaches from Japanese resource houses looking to purchase their stake in the joint venture. And JOGMEC, being a government agency, are currently going through a process, a tender process to potentially sell their interest. I'm not sure if this video will play perfectly for everyone, but I just want to give everyone a feel for the Trafalgar trend and our Trafalgar discovery. The trend that we see here is a 4.5 kilometre magnetic trend with also copper and gold anomalism in surface. This area has a number of old workings in it that were mined in the early 1900s, pre-World War I, skinny little shafts and deposits that were developed to a minor extent. And this 4.5 kilometre trend historically has seen 2 exploration drill holes into it over 120 years until we discovered the Trafalgar deposit this year by drilling 4 holes underneath the old workings. So these are the types of opportunities within our portfolio in Mount Isa. As I said, we're looking to build our copper inventory as we go through a methodical way of exploring this area. This camera shot will pull up at some of the old shafts, and these are the most prominent shafts outside of Trafalgar. It's in an area called the Springs. You can see the tiny little shaft here. It went down approximately 70 metres in depth, and this target remains untested. So that's part of our joint venture and part of the area that we're going to be exploring in the coming season. I spoke about the JOGMEC joint venture, and just to give you a feel for where we're heading, if you can see my mouse, the Trafalgar trend here is some 4.5 kilometres in length from Victory here to the Springs. And this magnetic trend flows all the way up into our copper resources already at Lane and Jubilee. Hammer is exploring at the moment, and we're drilling prospects along this magnetic trend in our own 100% ground. So prospects to the north at Lakeview and to the south at Neptune, we're drilling as part of our current program. I expect we'll start to see some results from that drilling through in the next fortnight. As part of that drilling program, we'll also be doing drilling for the joint venture. So we'll be looking to test the extent of the discovery at Trafalgar. So Trafalgar, for now, we have 4 drill holes into that prospect, some strike extent of 250 metres, and it remains open in all directions. So when we talk about building an inventory and talk about our next 12 months of activity, it's heavy on exploring, I guess, systems that show there's mineralisation through this region, with a view to defining resources at some of them. We have other prospects we'll look to define resources at later this year. Blackrock and Sunset have some great historical intersections in them. I think with a little bit of work, effort and time, we can turn those into JORC resources. And that's one of the reasons that we took some fundraising on board recently and sort of elevated ourselves to the next level. Without forgetting, I guess I've just spoken a little bit about the activities and the targets we're drilling as part of the current program. So there's 6 different targets there. I think it's a tremendous opportunity for people new to the story to have exposure to a company drilling good copper gold targets. And I'm excited to see what we can deliver as part of this program, but also in the second half of 2021. Before I sort of jump off, and this really is a condensed version of what is a much longer presentation, but I'd be remiss if I didn't talk about the opportunity that we have in Western Australia. Western Australia, we're in the Yandal Gold Province, 24 million ounces of gold produced through here. It was a really hive of activity in the 1990s and early 2000s with gold prices, and we're seeing a renaissance through here with the likes of Northern Star, Saracen, obviously the merged entity now, Bellevue, Red 5. It's a prime province for gold mineralisation, and what we've found in our tenure through here is it was explored to about 20 or 25 metres of depth back in the late 90s, early 2000s, but the tenure we picked up simply hasn't been touched since. So we had some good results there last year. It is a much earlier stage project than what we've got in Queensland. But our tenure here at the Bronzewing property starts less than 100 metres away from the Bronzewing South Pit, a 4 million ounce deposit, and we have tenure to the south that hasn't been tested below 100 metres directly south of the deposit. There's not many opportunities in Tier 1 jurisdictions, in safe jurisdictions, where properties such as this haven't been explored. So we'll be looking to drill here in the second half of this year. A lot more information that I could talk about in Western Australia, but in view of answering some questions, I might just pause there. I'm happy to take questions offline. But what I would stress to you is I think Hammer's exploring in two hot commodities, copper and gold. I think the thematics around copper are really good at the moment. Obviously increased prices at the moment with some supply pressure issues, but I think as we talk about the electrification of the world, addressing issues around climate change, whilst we also look to, I guess, have post-COVID stimulus in the economies of the world, I think the copper, metal and thematic is here to stay. In a rising inflationary market, I think the gold producers and gold stocks have a role to play in the global economy and the recovery as we see it. And I guess being in the right commodities, in good jurisdictions, with active exploration programs, with a good team, makes a good exploration company, and I think that's what Hammer's got in front of it. My personal contact details are here, my email address. I'd encourage anyone listening in to write them down, to get in contact with me if they've got any questions. I'm always happy to answer any questions that anyone might have. And I guess with that, Aidan, I might hand back to yourself and take some questions.
Sure. Thank you for that, Daniel. And if you just end the presentation, I think you just click the same button as before. Great, that's great. Okay, so we'll go into questions now. Thanks for a very informative overview of the company. Just for some background for the viewers, could you give us a little bit of a background of what you've done previous to Hammer and how you've gotten here?
Yeah, so thanks, Aidan. I've been with Hammer for near on 20 months. Immediately before Hammer, I spent 5 years as a business development manager for Sandfire Resources, so an ASX listed copper gold producer. As part of the business development role that I had there, I was looking globally for projects for Sandfire to acquire, so looking for good base metal projects. I decided that I wanted to try and replicate the success that Sandfire had seen in taking a company from a fantastic exploration play through to development, and I wanted to give myself an opportunity to try and experience something like that and be part of it from the start. So when I was looking around for a company to join, there are a couple of things that were really important to me. One was a quality project, and the second part of it, not being being a geologist or a mining engineer myself, I'm a corporate finance guy, a lot of experience around M&A, but it really needed a good technical team. So when the opportunity at Hammer came up with Russell and Ziggy with their technical expertise, Mark Whittle, who's a geologist with fantastic experience in the Mount Isa region and Western Australia, the ability to join a quality geological team and bring a different skill set into that mix with good projects was too good an opportunity to refuse. And I'm here 18 months later, loving life, and I'm really excited by what's in front of us. I think the company's set with a tremendous base of JORC resources already. With a quality team, we just need to add a little bit more to there to elevate ourselves to that next tier of, I guess, that mining evolution, that Lassonde curve, make the discoveries, add value, and then look to commercialise them.
No, thanks for that, and apologies for the camera mishap there. It fell off the stand that we have. And then in regards to, so obviously you've got your background there. Is there any sort of other key people at Hammer? So you've got that executive background that you think is worth speaking about now?
Yeah, so Ziggy and Russell, having gone through the journey at Gold Road, and you see a company go from a sub $10 million market cap. I think Gold Road peaked at $2 billion this year. So they've got the experience in putting into place plans to grow a company to a significant size and create that multiplier effect on value. That's really important for us. Mark Whittle, as I suggested, very experienced geologist, knows Mount Isa really well, has been working on these programs a long time. And people sometimes forget that these projects, they're not simple, they're not easy. If we had the simple, easy to find deposit in our tenure, we'd already have the tier 1 deposit. So these things take time, they take knowledge and skill sets. Similarly, when Russell and Ziggy were out in Yamana, it took time to unlock the geological puzzle there, and that's what we're slowly doing in Mount Isa. We're now able to accelerate those efforts with a bit more funding, and I think Russell, Ziggy and Mark and our other board member, David, who's got tremendous corporate experience and has participated in a lot of different activities and investments globally. I think we all stand here ready to try and move Hammer into that next level, as I suggested.
It's a good storyline to draw, in the sense you could be the next Gold Road with the resource that you have, but also the key people that you have there as well. And so just moving on, so we've talked about, you've talked about the cash position, obviously the recent raise, just to top you up a little bit to continue drilling over the next 12 to 18 months. Other than the cash being there, is there anything else you'd want to speak into the actual exploration side of things and how you're going to create shareholder value in that space?
Yeah, I think one of the things that is difficult to rationalise at times, and for a shareholder, it's probably one of the critiques we hear occasionally, is we have a lot of targets and there's a lot of things going on. How do you prioritise them, and how do you ensure that you're focusing on the right things to create value? We go through a pretty thorough ranking process continually with our projects, and we really concentrate on drilling those targets that we think can make a difference, not just to the share price, but to the setup of the company. So, for instance, in Queensland at the moment, focusing on a 20 to 25 kilometre radius around the highway to add resources, I think is going to create potentially a lot of value and really changes the narrative for the company. In saying that, Western Australia, I spoke about those great gold targets. So it really is a balancing act, and as I said, the only way we can balance that is to take a ranking approach to everything we've got, test the best targets that we've got, and add value that way, whilst also keeping in mind on what we have commercially that could move the dial. So a while back, we got JogMec involved in Queensland. We had $2 million in the bank. Our focus was really in Western Australia. So it's bringing JogMec in as a joint venture partner of a very small part of our package in Queensland, not including any of our resources, keeping them to ourselves because we saw the strategic value in them. But at the same time, bringing JogMec in really reinvigorated our exploration efforts in Queensland. So the board has a considered approach to all of this, and it's not, as you say, it's not only the cash balance, it's how you utilise it and what you do with it that matters and will make the difference. And I think we've got a pretty good balance of understanding what's in front of us.
Thank you for that, Dan. And whilst we're on JogMec, so JogMec, their sales process is obviously a little bit different. And how will this affect the ongoing program and the joint venture as a whole?
That's a really good question. So JogMec, being a government agency, typically the way this would work is if someone had an interest to sell it, it'll all be done through confidentiality agreements and in the background, and no one would hear about it until some sort of deal was consummated. But JogMec, being a government agency out of Japan, needs a degree of transparency, and they have an obligation that when they are approached by another Japanese company to sell a commercial resource that one day will end up back in Japan, they needed to run a tender process for it. In saying that, running a tender process during a discovery is not the easiest thing to do. And for Hammer, we need to keep busy and we need to keep moving that deposit along and that project along. So JogMec have been fantastic in continuing to support exploration, pretty much unaffected by the sales and tender process that's going on in the background. And that's evident in the drilling we're just about to do on the Trafalgar project. Equally, our setup in Queensland enables us to be busy on our own 100% projects whilst that sale process is continuing. So for us, we've been able to meld it into our work programs and what we're doing. And I think on the back end of that process, we really stand to benefit from whoever walks into JogMec's shoes. I think they'll be aggressive. I think they'll really want to move the project along. And I think they'll want to see a definitive pathway and timeline to getting product back to Japan. So I see the sales process, whilst it might be a bit of a hindrance in terms of the overall thematic and what's happening and the uncertainty that it creates for investors, I actually think longer term it's a tremendous story for us to see a pathway from being just that explorer to actually having someone here that sees the inherent value, the copper price, the copper environment, and the ability to move these projects from exploration through that development phase. So yeah, I think we're continuing on nicely at the moment. It'd be great to see what that process looks like at the end, and I'm sure investors want to know that. But for now, it is what it is, and we'll work within the bounds of what we've got in front of us, which is more drilling and hopefully some good news.
No, definitely good news is always a good thing. And so in terms of your resource compared to other exploration companies in the region or mining companies in the region, how does yours rank in terms of its quality?
Good question. We're not in production, so we're not that tier 1 deposit with what we've got in front of us. We are that next rung down, and I'll talk in generics, and I'll use my experience at Sandfire. I think when we're looking at global projects, we sort of thought that the rough number to have a really good copper project, a sound copper project that makes money and gives funds back to shareholders, was sort of around that 30,000 tonnes of copper metal per annum. A 10-year operation, I think, is probably a standard number that people would think to. So that requires an inventory of around 300,000 tonne of copper metal. Now, there is a process going from a resource conversion to a mining inventory, and again, a rough rule of thumb, I'd say maybe you need 50% of your resource to convert into a mineable inventory and to get to market. And in terms of economics, I think anywhere around that 1% mark is great. So as we sit today, we've probably got, I don't know, 40 million tonnes at 1.3% copper equivalent. Sorry, probably 30 million tonnes at 1.3% copper equivalent, maybe a bit higher. Any which way, I think we're about halfway to that magical number to get at least halfway, probably 2/3 of the way to that magical number to get to that resource base that allows a definitive economic mining situation. So for us, a discovery at Trafalgar, Blackrock and Sunset, converting them into JORC resources, any sort of success in our 100% prospects at Neptune, Lakeview, I think all just starts to build towards that critical mass to give yourself some surety that you're going to get to that next stage in that development or that copper prospect. In saying that, there's some fantastic little projects through Mount Isa that operate 3 to 5 million tonne ore bodies at sort of 2% copper. Some of our systems, I think, are capable of delivering that. It's toll treatment, and so it's not as profitable, it's not as economic, but we're looking bigger picture, multiple resources combined together to give ourselves our own development scenario. As I said, all within 25 kilometres of a major highway, power next to the highway, a railway line to port, a smelter in Mount Isa 70 kilometres away. I think all the thematics are there. We just need to execute on our exploration now, deliver those tonnes, and then I think the rest will look after itself.
Okay, that's good to hear. And then let's move on to the share price. So since February, the share price actually dropped off a little. Can you provide some reason or insight into as to why that's happened?
Yeah, I think what you see is being in Mount Isa, you're subject to the wet season, and the wet season came late this year. It came in February. We were really lucky. We got those holes drilled at Trafalgar in December. It enabled us to follow up in late January, early February, and we literally pulled the drill rig out as the drill rig was half getting bogged, getting out of sight. So our timing couldn't have been better, but what you've seen from February until we started drilling about 2 weeks ago, you have seen a period of inactivity in Mount Isa. And I think a lot of people that invest in mining stocks invest in the news cycle, and the news cycle for us has been not as exciting as producing copper hits. That all changes as of now. Effectively, we've got those 10,000 metres done in Western Australia. Those results coming out over the next fortnight. We'll have our first results out of our Mount Isa drilling hopefully in the next fortnight, as long as the labs in Queensland haven't slowed up at all. So that news flow perspective and that exposure to news is good into the near term, but I think that helps explain the slow decline we've seen since the highs in early March.
Okay, no, well, thanks for that, and it's good to see that the news is back on track now and you're starting to drill again. Over the next 12 months, Dan, what do you think are going to be the biggest sort of challenges that Hammer's going to need to overcome?
Yeah, I probably touched on it a little bit earlier, Aidan. It is prioritisation and ranking and juggling. We've gone from market capitalisation of approximately, let's say, $30 million at the end of 2020, 2 projects, one in Queensland, one in WA, and 2 programs effectively. And we're gearing that up now to be a couple of programs effectively on our own 100% grounds in Queensland, continuing a little bit of what we're doing in Western Australia, and also having a joint venture with a discovery, which will hopefully see a lot more activity than it historically has. So we'll need to make sure that we've got the adequate resourcing, get access to drill rigs, getting access to timely results from the laboratory. So all of those issues, I guess, with growing will be challenges for us, none of them insurmountable, but they will be challenges over the next 12 months. Equally, I touched on making sure we're progressing the right targets in the right manner, and that'll be a continual balance. That's why we've got Russell and Ziggy on board. They're keen to do that, and we rely on their experience and Mark's experience to guide us into the right opportunities at the right time. As I said, it's all geared towards that 20-25 kilometre radius that we have there, whilst drilling our best targets that might sit outside of there. A lot of the targets that we're concentrating on at the moment have great potential and have the ability to contribute to that sort of magical number that I said in the region about getting into that development status. But we also have the ability within our portfolio to deliver a tier 1 discovery. So as I said, all of the easy deposits have been found, and this tenure that we hold had been forgotten about for a number of years. Smaller companies had it, not a lot of work had been done. We're still drilling big systems with big potential, multi-100 million tonne type systems with copper and gold prolific through the belt. They're still the big targets that we're still exploring for, we're still out there looking for. And across 2,200 square kilometres of tenure, we have a lot of project areas that have these potential to deliver those types of systems, and we'll continue to explore them. And we'll explore them in a methodical way, as I said, ranking our portfolio and moving them forward. There are a lot of moving parts, and if there's one criticism I hear from people is, well, how do you balance it all and how do you manage it? And that's a challenge for us. But I think we've got the experience, we've got the skills, and we know what those challenges are. Moving them all forward in the right manner and in a way that creates value for our shareholders is at the forefront of our mind.
Okay, well, that's good to hear. I did have one final question before we move to live questions, but based on what you've just said now, I think you'll sort of say the same thing. I'll ask it either way just to see if you have a different answer. So when considering exploration companies, they generally fall down for one of 3 reasons, one of which is poor location, poor management, or not enough capital. From your perspective, which one of these pillars of the business could be the Achilles heel of Hammer?
Well, I'd like to think we've addressed them all with good people, good projects, and the right location. And I'd say, again, it's balancing the targets that we have. If you have a look forward, there's a long pathway from development, the little song curve, from exploration success through the development life cycle, and we'll face that. I don't know we'll face it in the next 12 months, but it'll come at some point where we move from being an exploration company to a developer and go through that cycle. So for us, access to capital into the future will be important. How we manage the JOGMEC joint venture going forward will be important. So there'll be a decision to be made. JOGMEC have some great grounds. They also have the discovery at Trafalgar, but we sit around that joint venture with 400,000 tonne of copper metal already in the inventory. So there'll be an opportunity at some point in the future, I would imagine, to combine the whole lot, to put it all back together and have us take a lion's share of the entire region in some sort of consolidated development play. How we manage that, how we manage expenditure, how we manage that development pathway and the study costs to get there. Getting capital isn't difficult if you have good projects and you have good people running them. So I'll back our ability to finance them, but there's always that question mark, well, what does that look like and how does that work out for our shareholders? All I'd say is rest assured that when we get to those appropriate points, we'll make decisions that we think are in the best interests of all of our shareholders. As we tried to do with the SPP, what we just did, would have been very easy to make it a full placement. We tried to give an opportunity for our shareholders to participate through the SPP. That was well oversubscribed. People didn't get their allocation. It was great, but we're always on the lookout for our shareholders and the people that have supported us to get us to where we are today.
Okay, yeah, no, that's great to hear. And it's good to get a good understanding of that juggling act of bringing all the moving parts together to make sure that the success story continues. So I'll just move to live questions now. So the first question, ultimately, so this is coming from Steve. So Stephen's talking about the high copper price at the moment. He's asking how you look to take advantage of this in the near term, considering there are potential other forms of energy, so compared to electronic vehicles, and he's mentioned hydrogen that could come in, the coming 10, 20 years as a development. How are you guys sort of posed to, take advantage of that market right now with electronic vehicles sort of driving that copper price?
Yeah, so it's a fair question. I think the key aspect to any mining development story is you've got, I think, a minimum of a 4 to 5 year timeline to move from being an exploration success into a mining company. So when you're planning for these activities, you've got to plan on long-term prices and long-term commodity forecasts. What I would say is 2,200 square kilometres of tenure is difficult to explore with an annual budget of $1 to $2 million a year, and you don't do it justice. Sandfire, for instance, around their DeGrussa deposit, are spending $25 to $30 million a year in exploration, chasing these deposits. So for a company like Hammer, accessing capital now in a strong copper price environment, $11 million allows us to do a lot more exploration work than we've ever historically been able to do. And that makes a difference in discovering these bodies and ultimately financing these projects in a high price commodity environment. The global average copper grade of mines at the moment is 0.5%. New discoveries are lower. So when you consider our portfolio, we're dealing with 1.3, 1.4% copper average, and the discoveries that we're making at the moment are 1% plus some gold credits. I think our level of project moving into a new copper paradigm and a new copper process holds us in good stead. I can't see the demand for copper decreasing given the electrification and the sheer volume of copper utilised in things like electric vehicles, wiring, new construction, solar panels, the like. I see copper playing a role for a long time, and I can't see where the global supply is going to come from to fill that gap. And you hear that from a number of far more credentialed people than myself. So I think copper prices at an elevated level, maybe not what they are right today, because we have seen some supply issues around the world. I think I saw a headline around the DRC stopping copper exports a bit today. The US talking about copper, they're moving away from producing copper in North America. They want to be known as a country that manufactures battery materials, but not necessarily mining it. There's all of these supply side issues that I think are affecting the copper price environment. But if it comes back a little bit, but still stays high, I think a lot of projects that previously weren't economic and weren't developed will be developed and will be highly profitable.
Okay, all right, thanks for that. Dan, I'll just move to the next question. Okay, so when Hammer Metals moves to the next stage, would you develop open pit or underground like most of the mines in the Mount Isa area?
Yeah, so I'll talk about our Kelman deposit because that's probably the easiest to discuss. Kelman will have a component, if we get to mining it and it becomes a mineable resource, it'll be a combination of both open cut and underground. So the extent of the ore body is quite, it's quite a steeply dipping ore body, so the vertical extent of it is quite significant. So there will be a component of both open cut and underground mining. Some of our other prospects are amenable to open pit resources. The topography is not too challenging in most of Mount Isa, and you'll find a number of development stories in Mount Isa and that region at the moment, such as the guys up to the north, the project Little Eva, owned by a Canadian ASX listed Copper Mountain. That'll be a big open pit resource. Similarly, the old Rocklands deposit open pit. So there's resources there that are open pittable. The permitting around them, the local issues around them tend to be resolvable in Mount Isa, and it's an accepted form of mining, both open pit and underground. But Kelman for now looks like a mixture of both. Grades at depth are increasing, and there's still exploration potential at depth. It'll be a combination of the two.
Okay, no, thanks for that, Dan. We'll just move to the next question now. So what made you decide to go for Blackrock and Sunset to increase the JORC resource?
There's a number of drill holes at both Blackrock and Sunset from the early 90s that sit within our records and historical drilling, and they show the most, I guess, advanced prospects of being able to be turned into a resource. So with some replication of the historical results, I guess verifying them through drilling next to old holes to make sure those records are valid, we think that we can turn those intersections into something that has a potential to put a JORC resource around it very quickly. So they are the two areas, I think, where we've got certainty around, well, not certainty, but we've got historical results that show great mineralisation, some good continuity in it, broad intersections at Blackrock, so 70 metres at 0.5% copper with a little bit of gold. Those types of intersections for us show that the system's got the potential of being converted into a resource, and there's just some further drilling that needs to be done. I'd love to be talking about putting a resource around some of our other prospects, but until we've got some holes into these prospects like Lakeview and Neptune, it's a bit early to be talking about turning them into a resource because we don't have the same degree of information that we do as Blackrock and Sunset. So they're the two obvious places that I think we can make a difference, and both of them sit in pretty close proximity to that major highway, so, and next door effectively to Jubilee and Lane. So they're the primary reasons for going there first.
Okay, thank you for that, Dan. We'll just move to another question. So, what is your relationship like with JOGMEC, and how did it originate?
Yeah, so the JOGMEC relationship started before I joined with Hammer. So they looked at the project for a period of time before they committed to the joint venture, and I was very lucky. I walked into Hammer effectively with a JV agreement to execute. Our relationship is really good. So previously, before moving to Sandfire, I worked for Mitsui in their oil and gas division for 2 years. So I'd like to think that I've got a good understanding of Japanese corporate culture and also the way in which they approach their investments and the way in which they conduct business. So I've utilised some of that background and experience, I guess, to try and benefit the relationship. I'm impressed every time we jump on a call with JOGMEC with their technical expertise. They provide a lot of their own analysis and own input into what we're doing, and it's incredibly hard for them not being able to visit the project at the moment, so they're doing it all remotely. And we've got a really collaborative relationship where we bounce ideas off one another. We meet as a team effectively, and plan the path forward with the assets within the JV and the Trafalgar activities as well. So it's a strong relationship. The guys fostered it over a period before I arrived, and it's proven beneficial for both groups up until now. And in some ways, I will be a little bit sad if they move on from the joint venture.
Okay, thank you for that, Dan. It looks like we're sort of running into closing time now. What I might do is I'll just give you sort of one opportunity to give a reason as to why an investor in Australia at the moment would choose Hammer Metals over another exploration company.
Thanks, Aidan. Really appreciate everyone dialing in. I've said it a couple of times on the call, but the three things you need for a project to move forward is you need good ground. We've built good ground position in WA and in Queensland, and that ground position in Queensland has taken us a long time to pull together. As I said, look at all of the tier 1 deposits around there, and here we are as a junior exploration company holding a really big tenure in that area. So that's number one: good projects, good areas, good jurisdictions. There aren't many copper exploration stories in Australia. in good jurisdictions. When you look globally at what's going on, Australia is a place to be. Established base metal districts is exactly where you need to be exploring. You need the right team to do it. We've got a team that's made world-class mineral discoveries before and has got an appetite to do it again, balanced with a bit of corporate experience and strategic direction. And the third element is financing. We're well financed for our next 12 to 18 months. I'm hoping it's 12 months. I'm hoping we've just got drill hit after drill hit, and we need to go back and we need to find a way to finance the next drill out of the next resource. In saying all of that, I think we're set for a tremendous 12 months, really busy 12 months of exploration across our properties, and it results in strong news flow. And I think the exposure to copper and gold exploration news over the next 12 months is a good thing to have. So I encourage everyone to read through our presentations, read through our historical announcements, ask me any questions that you've got, get comfortable with what we're doing, and jump on board.
Perfect. All right. Thank you for that, Dan. So I think the key takeaways are the right place, the right people, and good financing as well. And it's a great story to push out. So thank you for the time this morning, Dan. Thank you for everyone for joining in. Feel free to email Dan any questions you may have about the business or speak with us as well. Thank you, and all have a great day.
Thanks, Aidan. Thanks for having me on. All the best.
Thanks, Dan. You too. Bye.